There's a lot of players involved here at every level, from the ownership in Nvidia, Nvidia's ownership in Coreweave, the backing of this line of credit, the size of this line of credit, and that produced this outsized beat. How Nvidia has gotten to where it is might be worthy of some more investigation.
What's up, guys? I'm Nobody Special, and I have a special guest with us today. We have the founder and chief investment officer of LaDuc Trading. Samantha LaDuc is here with us today, and Samantha has something fantastic to talk to us about with Nvidia and their big new client that nobody's ever heard of, Coreweave. Samantha, how are you doing today?
I'm doing great. Thank you so much. Thanks for inviting me on your show.
Thank you so much for being here. I mean, you were on Bloomberg yesterday talking about China, and now here you are on YouTube talking about little old me. So thank you so much for making the time to be with us today, because I think you stumbled upon something pretty incredible. I found it on Twitter last Friday, was when I first reached out to you. And shortly after I reached out to you and talked about it, I actually had some of my followers started emailing me your tweets. I had some of my Patreon followers sent it to me. Some of the folks on Twitter were sending it to me. So that tweet was getting a lot of attention. I'm going to bring that up on the screen right now, and let's just talk a little bit about what's going on here. First of all, it started with this tweet from Brandon PM, and Brandon is pointing out here that Coreweave, which is Nvidia's big client, took out $2.3 billion loan collateralized by $2.3 billion of Nvidia's H100 chips. And those are their big GPUs that power AI servers. And then he says how Blackstone, BlackRock, and Magnetar bought $2.3 billion of Nvidia chips, which just happens to be the exact $2.3 billion in their data center beat on that magnificent quarter that they just posted. And then he says a fun fact: Coreweave, located in Las Vegas, the U.S. growth Nvidia mention is BS. And then you caught on to this right away, and you tweeted this one out. And this tweet kind of is really where you got the gears turning here. You say, and you thought Nvidia pulled forward demand based on Biden's China policy, which I think is in reference to the belief that maybe Nvidia sold a lot of chips because the China embargo isn't quite in place yet, and so maybe they pulled forward some demand. But really, it was Coreweave.
Funding of orders was the expectation, but not as much as was reported. Continue, yes.
Okay. So Coreweave takes out a massive loan 3 weeks ago. Its total market cap to buy Nvidia H100 chips, collateralized by those same chips, and that happens to be Nvidia's data center beat. PE, asset-based financing at its finest. Could you maybe elaborate a little bit on what it is you're seeing here? Why is this so significant?
It's the private equity mechanism, right, of moving forward with this collateralized loan. And it's a closed loop circuit. So you and I have talked about this obviously offline, because we're not suggesting that there's wrongdoing here. We're saying it looks suspicious as an irregular accounting method, not necessarily channel stuffing, which is typically when you have the opposite. They have a lot of demand. They have a lot of demand, not enough supply, versus the opposite. But that there's a lot of players involved here at every level, from the ownership in Nvidia, Nvidia's ownership in Coreweave, the backing of this line of credit, the size of this line of credit backing that happens to match their data center earnings beat. And it's all very much a closed loop system of, let's just call it, size, and that produced this outsized beat. And I sent you a chart, actually. End of January, analysts were predicting NVIDIA's fiscal year 26 revenue of $38 billion. Today, just 8 months after that initial forecast, they are forecasting $90 billion. So quite a bump. Current year, which is actually 2024, has gone from $29 billion to $49 billion. This is simply unprecedented, right? So the radar should be up a little bit. Is this real demand? That's the question we're trying to answer.
The circular movement of this money, these hedge funds and these asset managers and Nvidia themselves loan all of this money to Coreweave. Coreweave turns right around and hands the money right back to Nvidia for payment for these chips. So you've got this circular movement of money, and basically it drives Nvidia's share price even higher. And now every time this happens, we're using this to describes some future bump in demand, seemingly inexplicably. Demand is now magically supposed to go up to 90 billion. I don't want to make unfounded accusations, but it does somewhat seem a little Ponzi-like in that the circular movement of money and that the payment to Nvidia is dependent on whether or not we get any future investors to lend money to Coreweave or lend money to their clients in order to send that money right back to Nvidia. And then the people who are loaning that money to Coreweave also happen to be Nvidia shareholders. So they're also getting their money back right away, aren't they? Also.
Correct.
So in a follow-up tweet, you mentioned it. Coreweave is backed by Nvidia because Nvidia is one of the investors in Coreweave. They buy $2.3 billion in Nvidia chips, and they do it with a $2.3 billion line of credit that's financed by BlackRock. It was financed by Blackstone, by Magnetar, by BlackRock, by Carlyle, by PIMCO. I mean, all the big asset managers got in on this $2.3 billion line of credit, and they're all, coincidentally, shareholders of Nvidia. And then they use that $2.3 billion Nvidia chips as collateral for the loans. Then you point out, hey, these guys own the shares. The shares rally big time, 11% after hours, after posting that monster quarter. And then that big 11% run, it was all unwound during regular trading hours the next day. It's almost like that was these asset managers recovering their $2.3 billion investment in the form of selling Nvidia stock. Am I interpreting this data correctly, or
is that also interesting that in the prior earnings release, we had a lot of institutional investors clamoring for exposure to Nvidia. Then they obviously beat, we gapped up. You can see on the chart, it was a massive gap higher, and it continued until this recent earnings, which was just priced to perfection, right? Buy the rumor, sell the news. On this most recent earnings, the institutional desks were not participating. They were not all excited about getting exposure to Nvidia. And yes, we did completely unwind that 10, 11% gap up in after hours and traded pretty much flat, 0.1% on the close. So it was very much a sold to you. And there is quite a bit of finesse there if you want to kind of think on the conspiracy side. I want to show you a tweet where someone else smarter than me did the math.
BlackRock's Nvidia stake, 182 million times 470, 85.5 billion. What's happening on screen here?
Very much the fact that we had an outsized move after hours very much could have paid for it, that underwriting of that line of credit. But you can see the gain on the revenue beat, right? We had 85.5 billion times 11% is 9.4 billion. In proceeds, should they have, in his assessment, the cost, of loan to facilitate that revenue beat was 2.3 billion. They made out like a banshee. So in one trade, so that was the assumption basically of if you had worn that hat of, they knew what they were doing in underwriting that loan and basically following through with the sold to you mantra of Nvidia beat after hours. And this is all, again, just fascinating that it lines up so well with the Coreweave timing of that line of credit 3 weeks ago, 3 weeks prior to Nvidia's earnings.
So just if I could break this down into a little bit simpler terms, you're establishing the math here that, hey, just BlackRock's stake alone, let's say BlackRock had financed this whole $2.3 billion loan, which other players were involved. Just the gain that BlackRock made from their shares of Nvidia off of this big beat, which was driven by that loan, was $9.4 billion. So even if Coreweave defaulted on the loan and there were no GPUs to repossess, if all that $2.3 billion went up in smoke, BlackRock would still be up billions of dollars on this deal. Am I reading this right?
They did well. And that's, again, we're not forensic accountants here. We're just saying that would be, in a perfect world, a great trade. And it's just there as it relates to the whole backdrop of this seemed a closed loop circuit. This would have benefited them if, in fact, they did sell. We don't know.
Now, there are ancillary benefits going on in the market right now also, aren't there? Not just Nvidia stock is going up. When Nvidia stock goes up, they don't go up alone. They seemingly drag the entirety of the market with them. We've heard about the Magnificent Seven or the S&P 7 this year, right? And Nvidia has been the poster child for this rally. take away Nvidia, does this rally even exist? There's not a lot left there, is there?
Well, there is Apple. I mean, there's still the store of value that is Apple, very cash, bank of Apple. And there is, of course, always, we have a Fed Treasury that work in conjunction in making sure that we don't move too far astray. And they can do a lot of intervention as it relates to dollar swaps and yield suppression and, of course, intervention in the oil market. So it's not without manipulation, big picture. But Nvidia is absolutely a sentiment tell. It is most importantly a bullish backdrop for this next rotation that folks are excited about in AI. Now, you can debate the pros and cons of where we're going to go with it, but the fact of the matter is it's early. So right now, all of this excitement has been focused on Nvidia. There will be competitors. Nvidia will face competition. And some of these street highs that are coming in upgrades, Rosenblatt with, $1,000 a share, and we're like, the 470 range right now. It's because of this continued growth rate, which for others, myself included, it is unsustainable. Because of competition and because of the suspect nature of some of the closed loop accounting that's going on, or the deal making that's going on. So for the most part, it will create pressure on the semiconductor sector because NVIDIA is the leader. So if NVIDIA cannot maintain this leadership pace, this intensity, and this direction for a duration, then yes, the market will succumb to volatility and that reprices everything, and we will have a weaker backdrop for market equities. So it's important.
Now, before we started talking, or before we hit record, you had mentioned a little bit about how NVIDIA's CEO has, I don't know if criticism is the word, but there's been some commentary that he runs his company like a hedge fund. Could you describe a little bit about that and the background of that?
Oh, no, it's very much brilliant timing of stock buybacks when they buy, when they announce the buying and when they actually sell. It is very, very profitable. Runs it very much like a hedge fund. Also, not just in the timing of those particular transactions, but also investments in companies that are not just buyers, suppliers of their technology, but poised for that particular space. So they've made investments in medical device imaging companies and other kind of potential breakthrough plays. I mean, I'm talking ownership stakes. They are obviously invested in Coreweave as well. So that is what I mean by they run their business like a hedge fund. And as you have pointed out in your research, which I'd love for you to kind of overview, they have a lot of players in these companies that are of finance background, not engineers, not tech, savvy, not tech executives, but very much hedge fund type. So, kind of like it makes investors excited about this, by the way, that they're going to have a company that is run like a private equity firm. But on the other hand, there's a lot of retail that doesn't understand this. And I think that's your value actually to the market, is just making folks think, what if this is a circular loop and there is something, perhaps an inside club, and we're not in it.
And let's talk a little bit about the club. Forget for a second the clubs that I'm in. I'm not in any, Groucho Marx famously said, I'd never join any club that would have me as a member. But let's talk about Michael and Trader. He's the CEO and founder of Coreweave, all right? And keep in mind, Coreweave, this is this big up-and-coming AI company, the big data centers, right? Well, Michael and Trader, the CEO and founder, he's not necessarily a tech guy. All right, I'm looking at his LinkedIn page and about his history here. I'm scrolling down. Before he was the CEO of Coreweave, he was the CEO of Hudson Ridge Asset Management, which is a hedge fund. He's a hedge fund guy, as you pointed out. And before that, he was a principal portfolio manager at NatSource Asset Management. So that's the CEO of this company. He's not an engineer. He's not a programmer. There's two other founders. We've got Brian Venturo. He's the chief technology officer at Coreweave. All right, CTO. Maybe he's got a tech background. Scrolling down to him, well, here's his experience, the chief technology officer at Coreweave. Before that, he was a partner at Hudson Ridge Asset Management. He's another hedge fund guy. And before that, he was a portfolio manager at NatSource Energy, another trader. And that's the chief technology officer over at Coreweave. And then their third founder was this guy named Brandon McBee. He's the chief science officer. Okay, he's got science in his title. He must be an engineer or a technology guy of some sorts, right? Well, no. Founder, CSO of Coreweave. Before that, he was a trader at Active Power Investments. And before that, he was Fourth Floor Coastal. That's a hedge fund he worked at, proprietary trader, Wind Bay Power. So this Coreweave company, these guys, they're all hedge fund guys. And that's why I found it so interesting when you mentioned how Nvidia is run like a hedge fund, because these are the two companies here that maybe they're not single-handedly propping up the whole market, but they're having an outsized impact on the direction of all the indexes right now, the whole market, the S&P, the NASDAQ, the Dow, maybe not so much the Dow, but they're hedge fund guys. These are not innovators. This isn't your quintessential nerd from the biopic who makes the breakthrough in his garage band tech startup and then becomes the next big thing. These are hedge fund guys. Am I drawing the right conclusions here? Or?
Well, no, I mean, this is definitely the game that encourages investors, big institutional kinds, to get involved in this very bullish play. And just a few weeks ago, we had the 13F release, which is basically the big hedge fund disclosures of their holdings. And Nvidia made, of course, the list across the board, right? So everyone wants to have this as well as a portfolio owner, a portfolio manager on the books by, the quarter end. So there's a lot of concentration risk in Nvidia, but this is also the consensus trade, and there is a hedge fund connection for sure. Nvidia, the way it runs its business and its associated companies, Coreweave amongst them. So it wasn't really such a surprise to find that they're also kind of connected as it relates to this particular data center beat. And honestly, this is going to be something that I would hope when I did this tweet would create some conversation. I was not saying I'm a forensic accountant. I'm saying, look into this, people. There are those forensic accounting types who would like to understand, like the Coreweave connection with NatSource, which I know that you will talk about at another time, and carbon credits. And before that, they're very focused concentration in Ethereum mining. So they've gone from one very hot, some would say hyped sector rotation into the next hot thing, and they've done it for massive gains. At the same time, Nvidia is looking like the darling of the market that is just an exponential growth space. But there's always, it's mom radar. There's always a reason to take the bull and the bear position to better protect your concentration risk for those, especially in retail, who are chasing it with blinders on. So that's all. We're kind of having that conversation now. You had some more points that you wanted to make in regards to that kind of backstory of their crypto mining history. Is that something you can touch on and kind of let viewers know about? Because I found your research fascinating.
Yeah. So we'll do a teaser for the next video in this one, because I have started digging into Coreweave and their background. Started in 2017 as a crypto mining firm, nailed the top in Ethereum, and decided to pivot from using their GPUs for mining Ethereum within a few days of the all-time high, and then started getting into cloud computing. And then very shortly after that, tens of millions, hundreds of millions, and eventually billions of dollars started rolling in the forms of seed capital and lines of credit in order to finance them buying all of these GPUs. And there's a lot of background on these guys. Nothing outright illegal, nothing overtly nefarious that I found, but certainly proximity to some business dealings that at least there is the appearance, I'm going to say, there could be some smoke there. Let's just put it that way. Again, nothing outright illegal, even with this line of credit, right? This circular movement of this $2.3 billion. Nothing that on the surface is illegal. And this is a call to you guys out there watching. Dig into this. You forensic accountants out there, there are some guys out there with much sharper pencils than mine. If you see this video and you think you can develop on this story, by all means, reach out to me or to Samantha with what you find. And maybe there is a there. Samantha, is there anything else you wanted to share with us?
I mean, I think that there's definitely going to be due diligence that folks need to make and not just immediately assume that this is all or nothing, right? It's just the whole kind of nature of the beast of when we have euphoria, it typically marks a top, right? When everyone piles in. I'm not a sentiment trader per se. Obviously, I'm much more macro, intermarket, quant, micro. I do all modalities here of trying to assess what's going on with the market and sector rotation. I just seem to think that this particular blind eye to how the Nvidia has gotten to where it is might be worthy of some more investigation. And I think that you have done a really good job of following in that path to figure out who these players are, where they have, stepped before. And then, of course, the timing of this tweet that did go viral, it just prompted the very, very next day quite the puff piece in Wall Street Journal on Coreweave where there had been none. And it makes these guys out to be just, the Wunder kids who just stepped into this overnight success. And they kind of did, but in a backdoor kind of way.
Yeah, the Wall Street Journal is selling them as this, David and Goliath, this bad news bears competing with the giants of Silicon Valley for the AI market share. Not really the case, to be honest with you. The more I've looked into them and how the money has just poured in from the moment they pivoted from mining Ethereum into whatever it is they are now, the millions have just come flooding in from hedge funds and asset managers around the world. And yeah, I found the timing of that Wall Street Journal puff piece to be a little curious as well. Well, Samantha, I want to thank you very much for taking the time. I know you're a very, very busy woman, so thank you so much for talking with us. Again, that is Samantha LaDuc. She's the founder and chief investment officer of LaDuc Trading. She's got a YouTube channel herself. I'm going to put a link down in the description below. I'll also put a link to your website, LaDuc Trading. Is it .com?
Yep.
LaDucTrading.com. So you guys can check that one out. And everybody, until next time, live small and dream big.